Hi everyone, welcome to the channel. Today our focus is going to be on the company Palantir, ticker PLTR. And no, this is not an evil spy company, but it is a soon-to-be member of the S&P 500 index as they achieved 4 quarters of GAAP profitability and have a market cap of around $50 billion. Now, the stock price has jumped recently since releasing their fiscal year 2023 results, which showed high demand for the AIP platform, which enables companies to use AI technology with their data. Now, in this video, we'll look at Palantir's financials, perform a stock valuation, and at the end of the video, we'll look at my previous computer modeling for the company and perform an update for the next 52-week stock movement. But since this is a company I own, we'll look at my purchases into the stock and my portfolio's performance first. And I'll ask you to consider liking the video and subscribing to the channel if you find the information useful. So let's jump right into it. Here are all my buy-ins into Palantir. You can see my initial purchases back in March 2021 are down slightly, but all the other buy-ins I am ahead. And overall, I'm up just over 78%. While if I put that money into the S&P 500 index on those days, I'd be up just over 23% with dividends. So Palantir has been a great payoff for me so far, especially compared to the S&P 500. And my current cost basis is $13.23. And as I scroll down, you can see all the buy-ins I had over time. And my lowest buy-in was around $6 back in December of 2022. See right there. Obviously, I wish I bought in a lot more, but still, I did continue buying at some higher prices even after that. And my most recent buy-in was back in November of 2023 at just under $15. See there, $14.61. And down below here is the total summary. So I've invested, I believe, about $70,000 so far. And my current valuation or my current value in the stock is just under 120,000. Now let's jump over and we'll just look at the overall performance of the portfolio. Here's my portfolio's position overall, and we can see Palantir to the top there, center right, and it is one of my larger positions. We see right next to Berkshire. But for Palantir, we'll see how this grows over time, and I would like to add more, but it is going to be based on my valuation and what the current stock market is pricing it at, if or when I buy into it again. But let's move on, and we'll look at their financials next. So looking at their financials, first I'll point out that Palantir went public back in 2020, so we only have about 5 years or so of financials available, though they've been around for about 20 years when they were private. Now, looking at dividends, the company doesn't pay a dividend and don't expect dividends anytime soon, so we're going to jump over that one and go to shares. Now we can see share count since 2018 has increased, actually has increased quite a bit, especially in 2021 when it was up almost 100%. However, the last 2 years, that dilution has calmed down. We can see just over 7% in 2022 and just over 11% for this most recent year. Now, management did indicate that they will be looking at or potentially looking at buying back shares, though I don't expect that to happen, at least for another year or two. But I am going to put this down as a watch item. I hope they can get down to the low to single digit range for the yearly dilution up until they can start buying back shares. So that's why I have this as a caution just to watch for in the coming quarters and years. Now, moving on to revenue, we can see revenue has grown nicely since 2018, up about 270%, though a big portion of that came in 2020 when it was up 47%, and 2021 it was up just over 41%. So, though the revenue growth has slowed down, it's still up over the past 5 years. So, we are going to look at that as being a positive. Now, looking at it on a per share basis, and because of the stock dilution, we can see it's not up as much. It's only up about 17% since 2018. Though it's up, I am going to put that down as a caution because it is the same thing that we just discussed with the shares. You know, the more they keep diluting us, if they're not able to keep up that pace with the revenue growth, we're just not going to see that growth that we need to see for a young company. So net income and earnings per share, we can see on the fiscal year basis from 2018 to 2022, they were negative. However, over the last year, they have been GAAP profitable, and this is going to be one of the reasons why they're going to be entered into the S&P 500 index. And we can see for 2023, net income 210 million, and on a earnings per share basis, 9 cents per share. So good signs heading in the right direction. So we're going to give both of these a check mark. And then free cash flow. They've been positive since 2021, which is a nice sign. Up almost 120% since that time. Though it's only a couple years, it's heading in the right direction. And then same thing on that per share basis. We can see it is up, though we've looked at that dilution with shares, but it's still up and not up as much as the overall free cash flow. But on the per share basis, it is up 75% since 2021. So both these are nice signs heading in the right direction, and hopefully this continues to grow. So going to give those check marks. And then book value per share, we can see 2018 and 2019, it was negative, but 2020 it turned positive, helped because that's when they went public that year. Though we did see a slight drop off in 21 and 22. In 2023, we can see he's back up, matching the high at $1.55. So I am going to give this a positive sign because it is heading in the right direction for the past couple years. Now, return on invested capital, I like seeing companies 10% or higher, and we know Palantir is still a young company in the public market, so I'm not expecting them to hit that mark just yet. But we do see here back in 2020 that significant negative number there. So I'm not sure if that has to do with some of the SPACs they invested in back at that time. But last couple of years, it is heading in the right direction, growing nicely. So I am going to look at that as a positive sign for the company. And hopefully in the coming years, it continues to increase and getting up and above that 10%. And same thing for net profit margin. I like seeing companies 10% or higher. And we can see for 2023, now that they finally turned positive, they're just slightly below that at 9.4 and heading in the right direction for the past several years. So again, looking at that as a positive sign. And in long-term debt, the free cash flow, any debt they had back in 2021, they paid it off and they've been debt-free since then. So companies debt-free, don't have to worry about bankruptcy. And the only reason why we're seeing some negative numbers in 2019 and 2020 is because they did have some debt, but free cash flow was negative. So that's what's causing those negative numbers we see there. But positive sign here for a company that has no debt. Overall, for the financials, I see positive signs. My only concern was that share dilution, and hopefully over time they can start bringing that down a little bit more and eventually buying it back. Now, if they can outpace it more with increased revenue growth, I wouldn't be as concerned, but we did see some slowdown in that revenue growth. But still, overall positive signs, and I am looking for the AIP platform to help bring in more customers and help increase some of these financial data points like revenue, net income, free cash flow. But let's move on now and we'll perform a stock valuation. So for Palantir's valuation, the first thing we need to do is jump to the top here and remove these negative free cash flow values from 2018 to 2020, because as we discussed on their financials, they've been positive ever since, and I expect them to be positive moving forward. So we need to remove these because it will seriously impact the valuation. So now that we got those removed, let's jump back down below and look at the valuation. So with those negative free cash flow values removed, we can see intrinsic value $16.10, and with a 90% margin of safety, it brings it down to basically $14.50. Now, this is based on a 25% short-term growth rate over the next 10 years with a 10% discount rate and a 4% long-term growth rate. Now, the reason why I'm using a 25% short-term growth rate, it's a little high, but we did look at their revenue growth back in their financials, and they do have pretty good revenue growth, though it did slow down in 2023, but I'm expecting that to pick up with their new AI technology through their AIP platform. They gotten very positive feedback from customers and potential customers during their boot camps. And with the this AI revolution, they are an AI leader. So I think it's going to help increase their revenue, which will also help improve their net income and free cash flow. So that's why I'm confident using a 25% short-term growth rate. And as we see here, it gives that intrinsic value at $16.10. Now, the market's currently valuing the company at $23. And I can see myself paying a little bit higher than the $16 valuation. I see myself going up to maybe about $18 because Palantir is a quality company, and sometimes you got to pay up for quality. But at the current valuation of $23, I think it's a little too high. So I'm going to hold off and see how the stock moves. But let's just see what kind of short-term growth rate we will need to value it at $23 like the market is currently. So let's jump up here and increase that short-term growth rate from 25% to 28% and see how it impacts the value. And we can see with a 28% short-term growth rate, the intrinsic value jumps up to $20.41. So the market has a little bit higher short-term growth rate. So let's take that up to 30% and see how it changes. And now with a 30% short-term growth rate, the intrinsic value now jumps up to $23.87, so slightly higher than what's currently trading at. So the market's probably using about a 29, maybe 29.5% short-term growth rate. But let's move on now and look at my previous computer modeling for Palantir and then perform an updated computer modeling forecast for the next 52 weeks. So here's the previous computer modeling prediction I did back in late December. So it's only been 2 months so far, so not a lot of time for it to play out. But what we see here in blue is the M5 rule, in green is random forest, and the yellow is the average of the two. So I'm going to add another line, and it's going to be the actual stock performance since that late December time period, just to see how that compares to one of the predictions. With the actual stock price movement now shown in red since late December, we can see it was pretty much tracking the average of the two methods up until beginning of February when Palantir released their 2023 results. And that's when we see the stock price jump getting up to close to $25 a share. But over about the past 2 weeks, we can see it has pulled back somewhat, getting down to the $23 that we mentioned when we looked at the valuation. But let's move on and we'll perform a updated prediction for the next 52 weeks. So in computer modeling software, I already ran the analysis using two methods. First, the M5 rule shown here, and the other random forest. And I already copied and pasted all the data in Excel as it's a little easier to see, but we'll just take a quick look here in the software. And we can see here, this is data is as of this previous Monday, February 19th. In the far right-hand column is the weekly average stock price for Palantir, which we can see at $23.59. And column right next to it is the S&P 500 ETF at $496.76. And other columns are just other various data points used for the analysis. Now we're going to scroll down 52 weeks and take a quick look on what the forecast is. And it is showing the stock being slightly higher where we are today. You can see at $24 and almost 60 cents. But let's go over to Random Forest and take a look at that prediction. And same thing for Random Forest. Data is as of February 19th. And scrolling down the 52 weeks, we're actually seeing this prediction being slightly lower, just over $19 at $19.35 out in February of next year. Let's go into Excel and look at all this data a little closer. So back in Excel, I already pasted all the data from the computer modeling software over. And first thing I'll point out is the vertical red line represents this previous Monday, February 19th. And everything to the left of that vertical red line is the historical stock price, and everything to the right is a computer modeling prediction. And just looking here real quick, and you can just see the history of the Palantir stock price movement. They went public back in September of 2020, and see a little volatile at times, jumped up to $35 a share and declined, getting down to as low as about $6 a share, and then recovered to where we are today at around $23. So we're going to jump over to another tab to look at all the predictions a little closer. M5 rule showing the stock price to decline in the upcoming weeks, pulling back to as low as $20 a share, but then ticking up in the middle of the year and then out in Q4 and into Q1 of 2025, being a little volatile, jumping as high as $30 a share and as low as $15, and then closing out the 52 weeks at $24.59 for a gain of just over 4% from today. And Random Forest showing the stock price to decline throughout the year with a price of $19.35 out in February 2025 for a loss of minus 18% from today. And then taking the average of the M5 rule and Random Forest, showing that same decline in the coming weeks and months, with the stock staying around $20 up until Q4 of this year, where it gets that volatility kicking in, just like we saw with the M5 rule, and getting as high as $25 a share and as low as about $18. Then closing out the 52 weeks at $21.97 for a loss of almost minus 7% from today. To recap, I believe a fair value to buy into Palantir is between $14.50 and $16, with the lower end taking into account a margin of safety, while the current stock price is trading around $23. But I am willing to pay a little higher than my valuation, up to probably about $18, since Palantir is an industry leader in AI, along with being a quality business, and sometimes you need to pay up for quality. As for the computer modeling, the M5 rule is showing a slight gain in the stock price over the next 52 weeks, closing in February 2025 at around $24.50, which would be a gain of just more than 4%. However, it is predicting the stock price to reach as high as $30 in early January 2025. While Random Forest is more bearish with a 2025 stock price under $20 for a loss of minus 18%. Now, I hope you enjoyed this video and got some useful information. If so, consider subscribing, and I'll see you next time. Thanks for watching.